Hey, it's Mark from Stock Pursuit and the Twitter account. If you haven't checked me out on Twitter, check out my account on Twitter. It's the same handle. It's Stock Pursuit with the underslash in between. I put out a lot of stuff on there. I've been putting out a good bit every day almost. Most days I put out something, and a lot of times it's some really good retweets. Like over the years, I've been following a lot of really good finance accounts and tech accounts, and I retweet the best stuff I see. If I see something really good, I'll definitely retweet it. So so we've got the Nasdaq, breaking out, and we've got a lot of large cap tech still continuing. So I just wanted to share my sort of overall big picture on tech and a lot of these big tech companies because we know the big tech companies, they are the market, and rightfully so because that's where the innovation is. I mean, these American companies, over the past, 40, 50 years or more, we know the innovations come out of the US and a lot of tech stuff. So, I mean, you look at Microsoft, Apple, I mean, even the sort of infrastructure stocks like Cisco systems and, back in the 90s, there are a lot of good companies that are in tech. So somebody, if you see things like I see a lot of things on Twitter where these people they talk about the Magnificent Seven, and they try to sort of put that as a negative thing where it's quite the opposite. It's there's a reason they're doing so well, and the Magnificent Seven is doing so well is because they're on pace to grow like faster than they ever have before, possibly. You know, with the AI tech, and it's really not. It's not doesn't make any sense to look to try to downplay that. Downplay their big tech's big tech's accomplishments over the past 30 years, 40 years. It's been amazing, and it's only going to continue. Like I don't think I used to think you could be bearish on about anything at some point in time, but going forward over the next 5, 10, 20, 30 years, I see tech continuing to be the leader and be some of the biggest companies. I don't see anything changing that, especially in the United States. I mean, a lot of other countries, their top companies are in different sectors in a different kind of industry, but there's nothing wrong with what Amazon's done or what Microsoft's doing. Is it's not really worth downplaying, but that's just my thoughts on tech. So I think if there are corrections, anytime there's a meaningful correction in tech, you get to buy it, and whether that's a correction during a recession or you know a big 10% pullback or something, it doesn't make sense to me to be bearish on tech or the Magnificent Seven or pretend like it doesn't matter that those are doing so well. Yeah, because they're probably going to keep doing well. I mean, so if you take out, so people will say, well, they'll try to downplay the what the largest companies are doing, and there's a reason they're the largest companies too. It's not like it's not all a bubble every year. So, but I just was looking at these charts, and the Nasdaq's breaking out, even Meta. Like I found some levels on Meta. The Meta, it just broke out like in the past few days off a 3-year high. So we're looking at it's breaking over the highs from 2021 now. I guess it was a little later than the Qs because I was looking at levels on Qs too. So I think Meta's a good buy too. I mean, Meta's a good hold, as a investment too because they're actually big into LLMs, and they have it's them and another company had the most um, NVIDIA cards, H100s. So I put that on Twitter. I put out this tweet about the companies that had the most NVIDIA cards. So they have a lot of potential for this really fast developing AI systems. So the Qs look pretty good. Like for a while we weren't sure what was going to happen there, but it broke over the 2021 highs, and then it kind of retested and failed, and then just kind of danced around there where it was comfortable. And like I said before, when the price congests a lot at a certain level, because that was the major level back from 2021. This was the high back in 2021. So when price kind of hangs around there, where it basically means it's comfortable there. So like I said before, like if you see price come up here and then reject quickly and go back down, that means that's obviously a top. But it didn't do that here. It it really strongly broke out the first time and then retested and then held it and then failed it again and then retested again, held again. So just the fact that it was hanging out there was bullish, and sort of rightfully so. It continued to break out there, and it's kind of hanging up here. Like I think it's really the tech is really set up for a pullback here. I mean, you just look at the daily action, like the intraday and the daily action. Like we got the shooting star there, and then another red day here, and then that gap down. That I did a video on that where Jim Cramer basically almost like top ticked the semiconductor stocks. Like he was tweeting about Nvidia and all this semis like Intel and AMD at like 4 a.m. and that was on Friday. So, and if you look at that uptrend, pretty much breaking now with that gap down. It doesn't have to hold, but you look at recently when we gap down, like the recent gap downs like that, because that's a pretty decent gap down. So the last one we had was, around the beginning of the month, and we had another gap down after that. So it was a pretty decent sell off. It's not a sell off by any means, but for nowadays, with the market going up like it is, it's kind of that's what you call a pullback. So when I say I'm looking for a pullback, I'm just looking for like maybe 1 or 2 more days, or it depends on how much they gap down there. But yeah, I think I'd be surprised if Qs pull back to like 418 or 420 or even like 415 or something. But that's kind of my thoughts on tech. Is you have to own it. Just own the companies, own the largest companies, and don't complain about it, because it's a good thing that they're doing well. Like I was looking on Twitter, like there's a lot of perma bears on Twitter, and I made a comment on this one guy's post because he took out he compared the Magnificent Seven with like China and and like the energy sector, and of course those sectors are down, but I don't know. It's just there's a ton of disingenuous, like intellectually dishonest stuff out there, and all these guys on Twitter, they just want to sell you something, and the way they can get a lot of views is to kind of be sensational and even controversial, or negative, because like a lot of times negativity seems to sell. Like that's why the news, I guess, is always so dramatic, and if everything's pretty nice and boring, then nobody's interested in it, right? Because it's kind of just the status quo or something. So yeah, tech looks really good. I mean, I think there's going to be at least a decent pullback at some point here. I could be wrong about it coming now, but it's gonna be one on the next leg if it's not on this one. And I was looking at these shipping stocks are still doing really well because I don't follow it that closely, but there's a lot of conflict in the like the Mediterranean and like a lot of shipping lines. I've just been the news feed I've been seeing is pretty bad for like shipping lines. So maybe I think that maybe that has something to do with why oil's up so much because crude oil's been getting momentum. Like the momentum's back into crude oil. So I put on some calls and like I think it was NGL because that one's been one of the better ones, the NGL, and it apparently had a lot of like Congress people buying that one too, possibly, but I'm not sure about that. But they've done really well for a while, and like the other shippers are still doing well too. Like my favorites, like GOGL, the GOGLs. It's basically like off a triangle there. It just broke out again. It's breaking out of that level, and it's got a nice uptrend still. And the TK has been really strong too. That one used to not be that strong, but I guess they've had a big turnaround here, and this one's just been huge relative strength for a while now, and it's got a lot of momentum still. Like this thing doesn't even pull back much. I mean, it might be due a pullback here, but this is another one I'm looking at. I kind of want to be cautious going into next week or this week because I just think it looks like the Nasdaq has just kind of lost momentum right now, and at least for a week, it might lose momentum for a little bit, for the next leg. So, but oil is doing well, so these look pretty interesting. The CTRM still has a setup there. I thought it was really going to go off that flag, and it tried to, but that could be just a fake out and it goes tomorrow, or it's going to come back to this trend support. Because I think that's really the big level there. So as long as it holds this level here, it's still looking bullish. And it's one of the shippers, or it's like a shipping company, so those have been doing pretty well, And the IMPP is still doing well too. I think it's a good place to take some profits because it's almost up like 100% now from my alert back in October. But I think it's still got some room to go, but at least technically. But it's still a good idea to take profits along the way if anybody bought that one. Just my opinion. And then those are the only ones that are really interesting. Like SBLK is still hanging in there. It might go next and might do a GOGL. We'll see. So that's kind of what I was looking at, these oil stocks and the shippers. Some of the shippers they do some oil too. So that's those ones. And the other thing I want to talk about is when I look at tech and what's likely going to be a good performer going forward in the tech sector is these data centers and the hardware. Like you can't go wrong betting on the hardware. Like I remember back in the 90s when there was the internet boom, Cisco systems, or like Cisco, did really well, and I think it might have been even one of the best performing stocks. But I mean, it was a huge performer, and because they did a lot of the infrastructure. Anybody that's doing the hardware, because what happens with the software is sort of up in the air, but they're gonna keep buying the hardware and the routers and any material that goes in these data centers. So, or NVIDIA is kind of the best example of that because they're the hardware for the software. So Nvidia's been the beast. So, but if you haven't checked out my article I did back in last summer, I did a I did a little piece here on tech stocks and sort of looking at history and looking at the history of valuations because about this at this time Nvidia was up a lot already and it was at a 30 price to sales ratio. No, actually, yeah, it was 30 times sales. Nvidia was 30 times sales back in the summer last summer in June. So I looked at the history because I remember all these other expansions we had in tech like because you had the internet back in the 90s, which kind of was like the infrastructure and then like the base, and then you had in the early 2000s there was the e-commerce because once you had the internet, you can do more on the internet. So they had e-commerce and you know and Baidu and Alibaba did really well. Actually, Baidu was one of those in the early 2000s, and it had a price to sales ratio of 30, which was just like Nvidia in 2010, and it still went higher, like a lot higher, uh, up to $145 a share with a peak price to sales of 44. So there's share price was up a lot, and it was up like 100%. The stock went up about 100% when it was 30 times sales. So even with the stock at 30 times sales, it still went up 100%. So that doesn't mean Nvidia can't go up. Like it's basically what I was looking at. Like Nvidia's probably in the same boat there. And I was right there because what I was trying to say is Nvidia is not necessarily expensive based on history because you look at the history, like Baidu went up 100% after it was valued like Nvidia, and then Alibaba had a price to sales of 16 times sales in 2015, and it still went up over 100% in 3 years after that. So you can't really look at. That's the thing about investing in markets is it's the future that matters more. The growth, the valuations matter to an extent, but what matters more is the future, and usually the future is pretty good, as it has been, and with you've got Federal Reserve keeping rates low, and you got the dollar is the world's reserve currency, so these companies they do pretty well, and I still think Hyundai has some value because they own Boston Dynamics, the robot company, and eventually at some point there's going to be this convergence of all of these different technologies we've been seeing, like virtual reality and maybe even the metaverse, and the augmented reality, and all these companies are working on that. Like Apple's working on these augmented reality glasses. It's supposed to be the next iPhone. It's gonna be like an iPhone moment when they have these glasses just like the ones on my face. Like these glasses like the ones on my face are gonna be the next virtual reality glasses, but augmented, or not exactly virtual, but it's augmented reality. So you see virtual reality in the real world, and that can be amazing. Like, and the opportunities for companies, to sell things is amazing too there, and like, I mean, it makes the experience a lot better, the buying experience for, especially like people that buy clothes, buy a lot of clothes or pretty much anything really. Like if you're buying a house or whatever, you know. But the other convergence is going to be, with these LLMs and whatever comes next with with those breakthroughs, where they get more like an AGI model. But then you put that with the glasses, with you know, with with those things together, then there's even more possibilities. So you know, that's so I think yeah. But back to the data centers, like I put some of my favorite data center stocks. You know, everybody knows the Belfuse, MongoDB, um, Vertiv Holdings, VRT, and Zscaler, ZS. But my other one now is the NTNX, um, because the NTNX is they had rumors to get bought out a long time ago, like months ago or a year ago, and I think it was actually 2 years ago. But anyway, they had some buyout rumors. So this NTNX, it's been doing really well too. You know, just as good or better than all the other data centers. And I mean, this stock's a beast, and I wouldn't be surprised if they do get bought out. But they actually pulled back too with the semis, with the tech. So that's kind of another thing. I mean, this stock was due a pullback for sure. So the fact that this beast of a stock is pulling back here, I mean, look at the chart. I mean, it's just been it's it's been up like almost every month for since last May. I mean, the uptrend never stopped. I mean, it kind of slowed down in the fall, but last year, but not for long. And but the fact this one's pulling back here too kind of makes me think we're getting a little top heavy on tech, which is okay. It's got to pull back. You know, I'd like to see it pull back. And yeah, this one's hard to short. You know, it's so hard to short. It's hard to short tech. You know, I've just got like a tiny position and some calls on the inverse, but you know, I think it's time for a pullback, at least in that one for sure too. And these other tech companies look good too. Well, there's a lot of small cap. There's like I've looked at a lot of small cap stocks too. And the IBEX, I haven't checked on that one in a while. Yeah, that one hasn't been so good. So that's pretty much what I'm looking at for the next week is just the shippers and looking to see if tech pulls back. Like I'm not really bullish on a lot of stocks here. Some of these biotech companies are looking pretty good. Like the CLRB was good on that looks like a flag, right? I mean, it looks like it's like a pennant. So if it breaks out and hits like 390, it could keep going. And the other stock I saw was Turkcell, actually no TKC. Well, this is the Turkey market, and Turkcell's in the Turkey, and Turkcell's in Turkey. It's a Turkey stock, and the TKC, it's one of the biggest companies in Turkey, and they, or at least one of the best ADRs, American Depository Receipt. So it's foreign companies that we can trade here, and they're listed on the American exchanges. So this it had resistance here twice. It hit resistance. It failed those levels for a year now, and then it finally it's breaking out again, and it's breaking out on a really strong day on Friday as a hammer, and it's really high volume for the stock, and it finished really strong the day too. Nice breakout. So like this one looks good too for a long. I mean, based on the way it traded Friday, I think it looks like it can continue the next few days, but it might pull back and retest again. It might retest that level. But it's really strong. I mean, it really looks like it wants to actually break out now, because it tried to here, and it wasn't even really strong. Like the candles there were pretty weak. So there's a lot. It's not just like this. It's not like this hammer candle on crazy high volume. That volume was big. Like you see, it traded 106 1.16 million shares. And that's what it traded at these low levels before the runs. Even back, yeah, you have to go back to way back into 2023 to see similar volume days. Actually, it traded over, it traded 1.3 million here, and that was like right before this huge run too. So it looks like it's gonna have a huge run, you know, just based on the chart here. I don't know much about the fundamentals. I mean, it's like basically a stalwart, kind of slow. It's a big company, so it's like a slow grower from my memory. But this one caught my eye in the scans. And I totally forgot about this quantum computer ETF because I was looking at the RGTI, but the quantum computer ETF's actually been doing well too. But yeah, I think that's one of the other things that can kind of come together with all the other tech is we could see that these more advanced computers like you know, they may get a breakthrough in quantum computing. Because the stuff I'm reading about what these AI LLM models are doing is pretty amazing, and it's better than most people realize. Because I've been staying on top of some of the best accounts on Twitter, but this quantum computer one's been breaking out too with the Nasdaq. Well, actually, no, it's not above the all-time highs, but I wouldn't be surprised if it gets there. But I think that's another good one for the long term. Because there may just be some big breakthrough in those too. Because they're getting these LLMs, these AI models to do some problem solving now, and like more creative things. So when you get these things more specialized, they can do pretty amazing things. Like I was reading this guy's Ethan Mollick. I think he's actually a university. He's like a university professor, or he works for a university because he said his colleagues at Wharton or at some college. So he put out this pretty neat tweet the other day. I guess it was yesterday about the GPT-4, which is OpenAI AI LLM model, coming up with better ideas than the average person. And I'll sort of summarize what I read. So they did 40 prompts, and they gave them like 40 chances, either people and these LLMs, these AI, to come up with these like new ideas for startups, like a startup business or something like that. And they had a panel of people it was a blind test, and they picked the best ideas, you know, blind. They didn't know if they were AI or if they were a person. And out of the 40 ideas, 35 of them came from the AI model, from AI. So that's pretty significant to me. I mean, it's not really a big sample size, like, you know, it's kind of a small sample size, and it's not like peer reviewed or anything, but it's still very promising. And they're finding that it can do things, it can be creative in some sense of the word. So, because a lot of these things a lot of our understanding of things is kind of abstract and not really concrete. So when you say like when they say create like an AGI model, they don't really know what that means, you know. But they're finding it can do things that I think was impossible, you know, 10 years ago. Or so the more they tweak these things to do what we want, you know, there's going to be some more. At the very least, there's going to be productivity breakthroughs in the whole economy, but the most is going to be like an explosion of information and innovation. Because if you can get a computer to come up with ideas and test it itself, and then, you know, fix itself write its own code, it's basically science fiction, but that's the reality we're in now. And Sam Altman sees these models, these AI models, being really um, quote unquote intelligent, or able to do things that a human can do in their daily work, in their daily work day or something like that. But the other thing I was thinking is the robots. That's one of those other things that might come together. That eventually these things will all merge together and there's like a synergistic part of all of it, of course, like the robots and the AI and the virtual reality, and it's all maybe even like a neural link or something. But that might be farther out. I think the thing is these LLMs, when they get these things doing when they can get them to be creative, like it looks like they are here, um, to solve problems and come up with ideas. The uses for that are just pretty much every industry. I mean, especially like biotech or medicine. Like drug discovery. I mean, there's all kinds of use cases for an intelligent machine, right? That doesn't get tired and can do a lot of calculations in split seconds. Those things like, calculators. I mean, you can't like calculators are have always been better than humans, and vast quantities of calculation. I mean, of course, there's some humans that can do pretty fast calculations, but the average person is not going to be faster than a calculator, or do like advanced theorems or basically. So it pretty much helps everybody. But it's kind of like this kind of just reiterates my sort of stance on tech going forward. So that's a good read though. If like I try not to tweet out too much stuff on tech on my Twitter account because I try to keep it just stocks. I think I might set up another account just for tech stuff for AI. But they go hand in hand because they're obviously what's behind the stock market now. So in the economy, so they're going to be behind the economy. So, but I still might do a separate account. So, but yeah, that's all I wanted to share for today. It's like 30-minute video already. So if you actually watched this whole thing, thanks for watching. And as always, I'll put out any more charts I see. If I see anything interesting or tweets, I'll put out more tweets that are interesting. So until next time, I'll catch you on the flip side.